Welcome to TradingLounge and the gold and silver video for the 6th of September, which is a Sunday. So looking here in the bigger picture, as you know, we're looking at from wave 4 here to wave 5. We're looking for 5 waves as 1 and 2 and 3 and 4 and then 5. And you know that wave 4 in terms of Elliott waves sometimes is simple, but most of the time it can be quite complex. So the idea for our trading was that we would trade to the level, we would get out, we would wait for the wave 4 to mature, because with corrections, the first leg down doesn't really give you a lot of information. It gives you an information of, say, there's 11 or 12 different types of corrections. The first move down, if it's in 5 waves, well, then we know that we'll have a 3-wave correction, then another 5 down. If it only has 3 waves down, well, then it could be part of the flat family or triangles or double zigzag, so it gets a little bit complicated at that point in time. The other point here that I wanted to point out too is that when we come to the level here, the number 2 here is a major level, so we would normally see the arrival, the reaction, which you're seeing now, the arrival, the reaction, and then we'll see the first high above the level here, which will be this one here. It won't go that far. Normally wave 1 and wave 5 will have some sort of relationship in them. However, once that's completed, then we get this ABC correction over here for this. And then this wave 4 becomes the real next trend in the this is where it leaves the 2000 at that point. Okay, so but we'll play around with this from wave 4 to wave 5 here. We can certainly trade that up here, and there'll be 5 waves in that leg there as well. We just need this to finish here first, and then we'll pick that up. So with that in mind, let's go in and have a closer look on the daily chart here. Last time we spoke, we thought that there was 2 things we could look at. We could look at, well, we just knew that the thing was going to get complicated, and wave 4 could be sitting here for this. It's still possible, but it looks more like this is a B wave here, so it appears that we'll probably end up getting this down here. So I'm just going to dull that out a little bit, not give it so much significance, but it's still there. If the market pushes up from that point, then we would need to look at this as wave 1 here and wave 2 here, and then moving up higher from that point. But let's go in and take a closer look at this particular pattern here on the 4-hour chart. So we're looking down. Here's the A wave here, then an A wave here, then a B wave here, and a C wave here for the B wave. And this does look rather impulsive to the downside, meaning impulsive means 5 waves. So if we get 5 waves in the opposite direction of the previous trend, then we can look for 5 waves here. After a correction, we can look for wave 3, 4, and 5. So it does give us a bit of a trading opportunity in here for this. So let's just go to the hourly chart here for this. So there's just a couple of little things here that I want to point out. Is we can count the 5 waves down here, okay? Now, it's possible that wave 2 is already in play here, okay? Or wave 2 is going to be over here pulling back to the 50-60% retracement level. This spike here came quite close to the 50% level, but we'll give it a bit of time. So if this low is breached, then we know that we can go start looking into wave 3 here. Otherwise, we'll see an A wave, a B wave. I don't know where that came from. Must have lost my mind. So wave B there and wave C. So basically a 3-wave counter trend. And what I wanted to point out here is that, yes, you could look to sell in the box, or if you wanted a safer trade, then use the low, this green tab here, the low of wherever wave B is. That may be higher, it may be skewed over here, but this is obvious here. The second low will be obvious as well. It's like this low here. We can go to the second low here in that case, but this will be a bit big of a picture over here. So anyway, that's the 50-60% retracement level. So there's 2 things that can occur here. We can either have that as wave 2, and that means that we would just plow straight down here. Otherwise, we'll be looking for a little move up here for wave 5, and then for wave A, and then wave B coming back, sitting probably on top of group 1 here. So 1900, we've got 1, 2 and 3 that make up group 1, and then a push up. And it doesn't have to go all the way to the box here. It may not. It may just sort of, you know, just make a new high into the 50% area here and then fold down from that point. So anyway, the lows are what we're actually looking for in this particular space. I do just want to have a look at Barrick Gold, if I can find that, because we were looking at that. I'll just bring that across over here. So we're looking at ABX as 1 and 2 and 3 and 4 and 5 here, completing at this point. This move here does look impulsive to the upside, so I don't know if that's, and this looks corrective here as well, but either way, we wouldn't trade this until we've got our first high above the level as such. So that means that we would still, if we were going to have a long trade here, we would need to see this push up and then fold back, and if it folds back, it will bounce off the level again and then come back there, and so on. So then it will give us that reference. Would have that one, then would have that one, and then we can also get one here too if it decides to get back on. But we do need to see that, a bit like this over here, if that's okay, or even this one here, they're always a little bit different, but they're the same. It's the same principle. So this is the first high above the level, so we could have gone long if we breached that. Then we can bring it down to the second level here, but obviously in this case it's dropped away. But this method just keeps us safe. So it's come all the way down here, and maybe we could have done something over here, but when it comes back over here on this little high here, had the arrival, the reaction, the first high above the level, that particular pattern that we're looking for. So I'll just show that pattern if you don't know what that is. So if this is the price point here, a level, we've got the arrival, the reaction, the first high above the level, an ABC pattern here, and then back on the level over here. Sometimes it doesn't go below the level here in that case, so we can look at it like this here, but we still have that first high, and we still have that one here. We're trying to understand, this is just a pretty picture to help you with understand a tested support at a price point. Really, it's all about the volume, but if you can't read the volume, then you've got to look at the pretty pictures. So that's kind of it, really. But it works a treat. So at the moment, you wouldn't want to buy this. Yeah, sure, you could buy it and it could push up, but it will fold back. Same case here as well. So anyway, nothing cooking there. The other one, besides Barrick, is Newcrest, which is an Australian company. So I think that we've also got a little bit dodgy to count in here, but I've counted this as 1 and 2 as I did last time, and 1 and 2, and then looking at wave 3 and 4 and 5. And since we spoke last time, the market has pulled back down into this space. I won't look at it. I won't pull that trend apart just yet. It doesn't really interest me at this point. I know that it hasn't finished, and there is pressure on. I mean, it's a gold stock. It's probably the second biggest after Barrick or thereabouts. I don't know, close to it. The other point is too that it is a stock, and stocks are being pushed around now. For the Australians, this is the XMJ, the materials sector, and from the March COVID correction, we've got 1 and 2 and 3 and 4 and 5 here for wave 1 here, an A and a B and a C for wave 2, and then 1 and 2 and 3 and 4, and then 1 and 2 and 3 and 4. Oh no, that's wrong. 1, 2, 3, 4, 5 here for the top. So we've got wave 1, 2, 3, 4 here and 5 here. So we've got a top in place here. And for the Australian market, the ASX 200, which the material sector, this one has been the dominating factor, and it's rolling over now. So we're going to see further. We're seeing a correction here of an A and a B and a C. But the good news here is that this is 5 waves to the upside. So we will see an A and a B and a C, and then we'll see further upside here as well. Just looking at the bigger picture here for this. That's okay. Just doing my own thing. Don't worry about that. So that's cool there. So that's NCM. Not looking at much there. So we also want to have a look at silver as well. I won't look at iron ore today, but I want to bring that into my little metals thing here. But so look, silver's doing much the same thing as gold. We've got our wave 3 here. We've got an A wave here, a B wave here, and then a C wave down here. Now, it's only a B wave here if it stays above this previous low here. And this low here would be confirming that you can short it. But obviously be very careful, because when the market comes down to a previous low, it's going to bounce back again, isn't it? So take that with a pinch of salt. And what you... well, 4-hour chart. Okay, that will do. So once again here, yeah, once this low is breached here, then it makes all of this corrective. That confirms breaking that low here confirms that this is an A and a B and a C. Otherwise, it doesn't have to be. We could also count this as 1, 2, 3, 4, 5 for the A wave here, corrective B wave here, and try to squeeze 5 waves out of this here, which we can as well. But yeah, I'm looking at it as a B wave. But yeah, so look, the same thing goes here as well, the same with gold here. So we can bring this up to here. We can also bring the second higher, which will probably the B wave here, which will probably be in here as well here. I'll leave that for you to do, but that can pull back to the 50-60% area here as well. In this space here. So yeah, look, just be careful if you're going long, you know. Look, if I've got all this wrong, and I've been wrong before, so if the plan B is that if 2,800 here becomes the tested support, and you'd want the classic trading levels pattern, so the arrival, the reaction, the first high above the level, so that you could use those as things, but they're never, as they're the reference point highs. That's the reference point high, and if you get the second one, you can take that one, and if for whatever reasons it moves up, well, then you can just you'll be triggered in and you'll be on the right side of it. It just keeps you safe. That's all it does. So yeah, same as gold. So that's that really. So I'm going to leave it at that. I don't think that I need to cover anything else. I mean, obviously this is a gold video, but squeezing silver in there and a couple of stocks and maybe some other metals now and again is okay, I think. So alrighty, cheers, thanks.